Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time on this Friday.
Good afternoon.
Well, stocks in the U.S. Closed lower on Thursday, despite the economic growth there coming in better than expected for the third quarter. Poor results from Micron Technology and a continued decline for shares of Tesla. What's the story in the global markets?
Yes, on Thursday, Dow tumbled as much as 2.41% before ending the day by about 1.05% lower, while the S&P 500 and NASDAQ composite dropped 1.45% and 2.18% respectively. All 11 S&P sectors declined, led by the consumer discretionary, technology, and energies. This move came as there was an upward revision to the third quarter GDP number, reinforcing the case of the Fed to raise interest rates further and maintain them much higher for a longer period of time. So the positive news of economic data is actually acting as a negative news for the equity market because of the interest rate environment. Also, we saw some of the data for the labor market. It came in better than expected, so might cause the inflationary pressure to be much stronger and longer, obviously causing the uncertainty for the market as well. Now, the investors are looking into the November PCE report. Basically, the Fed's preferred inflation gauge. Most likely, that number coming in below expectation might cause the market to recover. But for the time being, more economic data is needed in terms of the personal income as well as the new home sales and consumer sentiment in the future. As you said, individual stock-wise, if you look at the Micron Technology, the stock fell by more than 4%. Philadelphia Semiconductor Index also down by more than 6%. Clearly, there's uncertainty about economic recession, possibility of the cycle being weak going into the first quarter and second quarter of next year. People are concerned that the numbers for the earnings will not be coming in as we are hoping for. The adjustment for the earnings growth for the fourth quarter is minus 3% year on year. Also, looking into the first quarter and second quarter of next year, revisions is already made, and that economy recession numbers are already implied to the overall market numbers. So if that's the case, a lot of the uncertainty is already priced in. But nevertheless, because of that uncertainty lingers, market will continue to be volatile until sometime in the first quarter next year.
Well, all those factors you mentioned are concerns for Korean companies, too, like chip maker Samsung Electronics, and stocks were lower today by quite a bit, more than 1.8% on the KOSPI, 3.3% on the KOSDAQ, now below 700 points. Losses for all the big names, especially tech. Tell us about the domestic market.
Yes, if you look at the overall KOSPI, it was down by 1.83%. KOSDAQ is sharply down by 3.3%. Clearly, there's uncertainty about the overall market condition led by the U.S. Chinese market, however, though, did reasonably well as the PBOC continues to put liquidity into the system. They have net injected 704 billion yuan of money into the banking system, allowing the liquidity to boost the economic growth. But despite all that news, we saw market to tumble. If you look at the overall foreign investors movement, there isn't much of the volume happening here. Foreign investors net sold about 72.6 billion of KOSPI and 97 billion of KOSDAQ and bought futures of about 83.7 billion. But if you added all that up, that's really slightly not much of the movement. Overall, trading volume and trading values were dropped significantly. So people are just waiting for some kind of positive news come through. But nevertheless, still people are uncertain as the U.S. market tumbled yesterday. If you look at the producers' prices of the South Korea, it rose by 6.3% year on year in October, which is the least since the April of 2021. But nevertheless, still a very high number. And if we look at the Korean won movement, it is at around below 1,300 won to dollar rate. But that really not allowing the market to recover as the Korean won appreciate, as the foreigners are not really net buyer of the market. In terms of sector-wise, we see that credit card sector and some of the airline sectors did reasonably well, and some REITs-related, tour-related sector did reasonably well. But overall, most of the sectors did quite poorly. We're waiting for what will be the pressure for the inflation number as well as economic condition for Korea. If the economy continues to be weaker in the future on a global scale, then obviously Korean market will be tough to recover from the current level. But as I said before many times, the valuation of the KOSPI is at the cheapest out of amongst the older market globally. Therefore, the cheap valuation would put some probably some barrier to the downside pressure.
Well, these concerns about growth, we see oil prices falling for several days in a row now. West Texas Intermediate for February down about 1%, Brent down 1.7%. What's behind the continued decline in oil prices, and what's your outlook?
Yes, if you look at the WTI, yesterday it did drop to below 78, but today it's slightly back up to about $78 per barrel on Friday. We think that the trading bound will be somewhere between $75 to $85 per barrel over the next 6 months or so. If you look at the U.S. crude supplies and in terms of the improved demand outlook coming from the China side, there's quite a push and pull between demand and supply. So therefore, we don't think that the price is going to move sharply per se. Overall, we are seeing, despite the very cold weather that we're seeing, natural gas prices are declining in the U.S. It is below $6 per overall. So now, if you look at that movement, still a lot of people are uncertain about the demand or the supply side. So if we think that the economic growth rate will be slowing down significantly in the first quarter and second quarter of next year, demand side is not going to be strong. So therefore, the supply side and demand side is going to be in a position where the prices might not be moving that much. As I said, the prices will be varying between somewhere around $75 to $85 per barrel over the next 6 months or so.
Got it. All right, Mr. Yuanta, we'll leave it there for today. Thank you, as always, for coming on the program, and have a happy Christmas.
Merry Christmas.